go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Now today, Asian markets have opened up fairly on the positive side right now.
They said, we'd love to do it a different way. We'd love to invest in the United States with billions and billions of dollars.
The India-UK trade deal coming into force aims to boost bilateral trade to over $120 billion by 2030.
Oil's at about $86 odd, just under 86 this morning.
Common trend among most of the fund houses this month has been the fact that they've doubled down on a lot of these private financial names.
24,100 on the Nifty, about a 0.25% higher.
We've been underweight on IT. Recently, we've reduced that underweight a little bit.
Fed has not reached its inflation target for 5 years. And they're getting very frustrated by that.
I would say we are reasonably positioned as, as at least one of the, if not the market leader.
We've seen recovery already. If it continues to ameliorate from here on and perhaps at some point move into the green.
Balance sheet is strong. The business is going exceedingly well. So there's absolutely nothing, which I could even report.
What a fall in last couple of minutes from the highs. The Nifty is up 150 points from the highs of the day, very close to that 24,050 mark.
Today, Hero's cumulative investment in Ather has crossed 2,400 crore. And now Ather Energy is valued at nearly 50,000 crore if you consider today's stock surge.
So it was up around 2.5%, a 5% uptick on ICICI Pru Life. Also expecting HDFC Life's numbers, so we'll be tracking that for you as well.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. It's a very special Closing Bell coming up because I'm joined by Mangalam as well as Sonal. Guys, good to have you all on the show. Exciting 60 minutes coming up, and we have got plenty to discuss.
A lot to discuss indeed. What's interesting is right now the market, the range that we've been talking about for so long, right? 2,400 at the lower level to 24,250 at the upper level. Today, exactly that played out. If you look at the Nifty, the low on the Nifty, 24,010 and the high, 24,220.
Well, the look that Sonal gave you was like maybe she has something to say even post-market hours. That initial look, bro, just be on high alert.
No. I think I was just going to say, okay, I was going to talk about the Nifty levels, but Mangalam has done that. So let me talk about the sectoral moves for now. We do have the PSU Banking Index, which is still, one of the big gainers in trade today, 0.7% higher. A lot of banking earnings that we'll be discussing on the show today. In fact, we do have the oil and gas space, which is one of the big gainers, but a lot of pressure coming in from metals. We have IT, which is not doing so well. But this is something we'll discuss through the course of the show. Let's tell you what's lined up on Closing Bell today. Stocks trim gains. Benchmark Nifty drops to the day's low to test 24,000. Broader market indices outperform larger peers. Metals and FMCG counters top drags in the final hour of trade. Life insurers, they are also in the spotlight. Steady Q1 results lift shares of ICICI Pru Life. Nifty major HDFC Life too is all set to report results later today. Let's talk about the earnings fine print along with what is expected of HDFC Life. All those details coming up in just a bit. Let's talk about bumper market debut for Kusumgar. The stock listed at a 37% premium to its issue price. A deep dive into that business coming up on Closing Bell. Second straight day of gains for Nuvoco Vistas on the back of steady Q1 earnings. A quick read through of what the results mean for the business going forward.
Right. How should you then position yourself in the last hour of trade? Bonanza portfolios. Mitesh Thakkar now joins in with some closing strategies. Mitesh, the range on the Nifty is continuously playing out. What do you do?
Yeah. So, as you rightly said, I think, the Nifty, and I've been highlighting as much that the Nifty broadly remains very ranged. And the levels are 24,300, 350 on the upside to roughly about 23,800 broadly on the downside. So I think on the index, that's still not showing any signs of a directional move. I think it could be a market which might not do much. Similarly, on the Bank Nifty also, it's trailing around the 58,400, 58,500 mark. So that's another, worry of the Bank Nifty also not lending any kind of momentum or strain to the Nifty, and therefore it is likely that we might be in this range for some time to come.
Okay, got that. A bit of a range on the headline index, but what about individual stocks, Mitesh?
Yeah. So I have a buy on Dalmia Bharat Cements. I think that's where some kind of a small breakout has taken place. The stock was not getting past levels of around 1800. It's done that today. So that's a buy with a stop below 1795. And look for a first target of 1870, though I suspect we might even look at targets in excess of 1900 here. And the other stock is ICICI Pru Life. It gave a breakout day before yesterday. Yesterday was some kind of a pullback day. But today, I think it's regaining momentum. So that's a buy as well. Keep a stop below 514 and look for a target of 555.
Okay, Mitesh, thank you so much for joining us with those technical trades. In fact, Mitesh spoke about ICICI Pru Life. It is spiking following a decent set of quarter-one earnings. Value of new business grew 25%. Let's go across to our colleague Yash for the fine print. Yash?
Well, it's been a very strong start to the quarter with ICICI Prudential Life Insurance presenting its first quarter results. We've been talking about how the top line growth for life insurance companies in the quarter is expected to be strong. What the big question would be is that if the margin expansion happens, forget about the expansion, if sustenance of that margin happens and there's no negative impact because of various reasons, right? ICICI Prudential Life Insurance has really presented that strong number on the margin front. As far as VNB margin is concerned, that's come in at about 26.7% versus 24.5%. So that's the key highlight as far as the numbers are concerned. Apart from that, the numbers have been strong overall. New business premium, that has grown at 21%. Retail APE, that has seen a strong growth. APE is grown at 14.6%. Also, the value of new business has grown at about 25%. So overall beat, but of course the highlight remains is the value that the company has been able to derive out of the strong top line growth, that is in the form of VNB higher by about 25% and margins up about 220 basis points on a year-on-year basis, and similar kind of expansion from what the street was anticipating.
All right, Yash, stay on, but moving on from ICICI Pru Life, HDFC Life is slated to report its first quarter earnings in usually just a bit towards the end of trade is where it comes. Tell us what is expected.
Well, around 3:20 p.m. or it could even spill over to post-market hours. HDFC Life will present its first quarter numbers as far as the expectation goes. Again, strong growth expected as far as top line is concerned. So new business premium, that is expected to grow by 16%. The number that we are looking at here is 8433 crore rupees. AP expected to grow by 7% at 3459 crore rupees. Retail AP with a growth of 5% at 2922 crore rupees. The big question again here would be what is the kind of value which the company is able to derive out of the top line growth, because there is a negative impact of GST ITC not being present. VNB, what we are expecting is a 4% growth at 842 crore rupees, and margins are expected to decline by about 80 basis points. The number that we're looking at is 24.3% versus 25.1% last year, same quarter. Brokerages, they expect moderate AP growth due to weakness in the bancassurance contribution. VNB margins are expected to decline, as I said, due to the GST impact. Product mix likely to tilt toward traditional products from the ULIP products. Quickly on the stock, it's down 8% in the last 3 months, up 2% in the last 1 month. It trades at 2 times FY28 price to embedded value.
Okay, all right. Thank you, Yash, for joining us with that take. That's the HDFC Life's numbers expected anytime now. Let's go across to Siddharth Khemka, Head of Research Wealth Management at Motilal Oswal Financial Services, joining us now. Siddharth, good afternoon. Thank you so much for joining us. You heard Yash. ICICI Pru's numbers were better than what the street was working with. We're expecting HDFC Life's numbers in just a bit. What's your take on the entire space, and valuation-wise, how do you look at this?
Yeah, I think if you look at Sonal, the ICICI Pru numbers, there is a 9% VNB beat to our expectations. The VNB margins have expanded by 220 basis points. So overall, if you see the gross premium, that was in line and the AP was in line. But I think clearly the VNB margins and VNB, that has the profitability has been much ahead of expectations. So overall, if you look at insurance space, I think within the life insurance companies, the numbers for both the insurance, life insurance as well as non-life that had come for the first 2 months. But I think now we are seeing a gradual recovery for life insurance. April started on a strong note. May was a bit kind of, you can say, kind of subdued, but I think again the next month, that is June, we saw again strong growth. So overall, the margin story is that we are expecting this quarter to be where while the AP growth expected to be steady around 10% for the quarter, I think the margin expansion across the companies, that will be a key for the life insurance space. So within life insurance, I think SBI Life, which continues to remain our preferred pick, but I think with these kind of strong numbers, ICICI Pru should also do well from here.
All right, you are positive on the space. I wanted your thoughts in particular on two IT companies. One is L&T Tech Services, which is buzzing on the back of its numbers, and the other, on the opposite side of that, is Tata Elxsi, which is down about 5% post its numbers. You've read the numbers. How do they look, and what's your call on these stocks?
Yeah, hi, Mangalam. So if you look at the two companies same time, I think one did very well in terms of numbers, better than expectations, although the new order wins, that was not that great compared to some others. But I think still, if you look at L&T Tech, revenue grew 1.5% on a Q-on-Q basis in constant currency terms, which was in line. The surprise was on the EBIT margin front, which was above our expectation. We had an expectation of 15.4%. The margins came at 15.7%. And again, I think the third company which said that the management expects recovery from here on. So I think the entire commentary from be it TCS, HCL Tech, and now L&T Tech, I think one thing is very clear for the tech space is that we are closer to, so the worst is behind, and I think from the next 1 or 2 quarters, we should see marginal recovery. Valuations being at the comfortable zone for the entire sector, I think there are the long-only funds that have started buying on this space. From a retail perspective, I think there is still 1 or 2 quarters away where the sector can see some consolidation before the actual growth comes. With regards to L&T Tech, currently we have a neutral rating, largely because of the higher valuation and the slower growth expected in FY27. FY28 could be much better, but FY27 USD revenue growth of about 7%, and hence we have a neutral rating. Tata Elxsi, clearly, I think a big miss. Margins disappointed. We had a sell rating, and I think we continue to maintain our negative view on Tata Elxsi. Q1 does little to change the broader growth picture. Margins came well below our expectations. Plus the transportation, which is a key vertical for Tata Elxsi, that remains a key monitorable. Any recovery there could kind of give some support to the stock. But I think till that time, we believe that the current valuations leave limited room for upside in Tata Elxsi. Hence, we have a sell rating with a target price of 3,100.
Okay, got it. Let's move on then. The stock we're tracking on mid-cap spotlight today is Grow. The stock has gained close to 35% this year. The April to June quarter results as well were in line with what the street anticipated. But Divyani joins us to help us out with a quick analysis of those numbers. Stock at the high of the day. Divyani.
Well, it was an operationally good quarter for the company, with a drop in equity derivatives activity that was offset by a strong surge that was seen in the commodities turnover, roughly around 150% on a quarter-on-quarter perspective. Strong growth in the cash market activity, as well as continued scaling of the MTF business of the company. Now, from a financial standpoint, the street was expecting a flattish quarter this time, with a drop in market activity that was observed after a robust March 2026. Now, revenue was largely flat at 1,501 crores, in line with street estimates. EBITDA came in at 963 crores, up 4% on a quarter-on-quarter perspective, with margins expanding over 200 basis points as a result of operational efficiencies, in spite of the higher employee costs that was seen this time around. Now, lower costs and higher other income aided in PAT growth this time, which reached 735 crores, and the street was working with a flattish PAT growth, so this beat street estimates. Now, what does Grow do though? Groww is India's largest retail broker with over 2 crore users on its platform. It makes money primarily when people trade and with over 50% of its revenue coming in primarily from the equity derivatives activity of the company, the cyclicality is definitely something that the company faces. Now going forward though, it is focusing on diversifying its business away from the traditional broking business itself, utilizing its large customer base to grow its wealth management business as well as its AMC platform. Now valuation though against peers, Groww trades at a valuation of roughly around 64 times its FY26 PAT as against its closest peer, which is Angel, which trades at 34 times its FY26 PAT. So there is a big difference in the way that these companies are valued, and the growth needs to actually justify this particular premium that Groww trades at.
Okay, all right. Sid, what do you make of this one? Groww, people thought it was expensive at 150, 160, 180. It's at 215 rupees. What do you do? Expect it to grow from here?
Nigel, I think company continues to surprise. The numbers were far better than expectations. So we were working with a 74% kind of PAT growth, and PAT growth came in at 94%. So there's a 12% kind of PAT beat from our expectations. I think revenue was in line, but I think this is one stock which continues to surprise on the growth side. So both on the revenue growth, I think there is a rising user adoption of all products, plus the user activation. So while the brokerage business is gaining market share across segments, they are also entering other segments such as MTF, commodities, which will only add to overall growth. I think while the valuation discussions can happen with this kind of growth that the company is reporting, I think there is room for upside. Currently, we are working with a target price of 240, but I think post these numbers will get revised and we could see even further upside for Groww from here on.
All right, we take that point, further upside from Groww from here on as well. But this week definitely belonged to stray moves in a lot of consumption stocks. So let's just round all of them up for you and tell you why these stocks moved a certain way and what are the triggers that we're tracking going forward. Patanjali Foods, let's start with that one. It's off the lows, but it's still down about 13%. In fact, at its lowest point, it was one of the biggest single-day falls that we've seen in the stock all the way since 2020, with big volumes backing that as well. We're trying to figure out what the reason was. Nothing fundamental, says the management. In fact, we spoke to them. They said that business is robust, no change in underlying fundamentals. There haven't been any regulatory inquiries, visits, or even, financial regulators, raids, etc. on the company. They continue to remain debt-free, and reserves and surplus for them are at 5,000 crores. So what is it that is key to track from here on? One, institutional shareholding in the company. Has there been any pairing of stake by some of the key institutions that hold that stake? And secondly, you will obviously look at the fundamental first quarter performance and commentary from the company on that as well. Kalyan Jewellers, on the other hand, up 41% this month, continues to do well at the high point of trade right now as well. And the reason for that, strong first quarter update, and then the valuation gap with Titan was what took the stock higher. So just to reiterate, what will be the key things to track for Kalyan Jewellers from here on when it comes to valuation discount versus Titan? If you look at it, at its trough, it was around 70% from where the stock started moving. Now it's around 50%, and at its peak, it's been about 35%. So this is something that we will be tracking. Kalyan Jewellers currently trades at around 26, 27 times as against Titan, which trades at 55 times. And finally, we have Bajaj Consumer as well, which over the last 2.5 trading sessions posted its numbers down around 13%, 15% actually. And we pointed out that, ahead of those numbers, the stock has rallied about 190% and trading at 35 times. So the key to track now will be any sort of outperformance that comes in on the current base. The last 4 quarters, the company enjoyed the benefit of a new leader and a high base. Now, easy pickings have been done for Bajaj Consumer. What happens from here on will be crucial to track. So that's about the consumption space and the stray moves that we've seen over the last few trading sessions. Let's actually hear out what the management of Patanjali told us this afternoon when we caught up with Sanjeev Asthana.
Absolutely no change in the business. Our business is robust. Our performance has been there in the stock market. There's absolutely nothing that has come either through regulators or any adverse impact that we've had. And the balance sheet is strong. The business is going exceedingly well. So there's absolutely nothing, which I could even report that which might be remotely connected to the sell-off that we're witnessing in the marketplace. And that must be, the investors' prerogative in how they're seeing it and how they're working on it. In last 1 week or 15 days, there's anything adverse or anything that either has been alluded to or notices received. So that part is entirely out of the way. In terms of, the business fundamentals, they continue to be robust, very strong. In terms of, the growth momentum that we have in the system and the way things are progressing are exceedingly positive.
All right, that was the management of Patanjali Foods. The stock recovered about 7.5% from day's low, still sitting with a cut of almost 13% and at near 52-week lows as well. Sid Khemka still with us. Sid, on the three stocks that I mentioned, do you have any thoughts? You have Kalyan Jewellers, which has seen a big jump. Then there is Bajaj Consumer, obviously good performance coming in, but the stock had run up. And then now you have Patanjali Foods, where the management is saying there's no fundamental problem, but the stock continues to see a sell-off.
Yeah, Mangalam, I think Kalyan is something that we track. The numbers, at least the pre-quarterly business update came in. I think the jewelry sector has, across stocks, have been reporting strong numbers. Kalyan, for its part, even Q4 was pretty strong. However, I think there were some concerns with regards to valuation and now some overhang now be getting removed. I think now the stock has started performing. Q4 was exceptional. I think the company has a diversified presence, strong customer liking as a brand franchisee, which is expanding across regions. And we are seeing it as a 20-22% kind of a CAGR growth. I think in this quarter also, the sales growth of 38% is pretty strong. India business was 38%. I think that was international business also was up about 35%. So I think all round strong growth. We are currently working with a target price of 525. I think the stock has seen a sharp rally, but I think again, we'll need to see the full numbers whenever the company announces. But as you rightly highlighted, there is a big discount compared to Titan. While the discount may not be bridged too soon, I think, but the discount can definitely narrow with the consistent performance that the company has been delivering quarter after quarter. So I think from here on also, if any dips can be utilized as an opportunity. So we remain positive, but I think stock has run up sharply in the last 1 month and closer to our target price right.
Okay, all right, Siddharth, thank you so much for joining us with your take on individual names. So those are some stocks that are on our radar. Grow, by the way, some conference call commentary coming in. They've been talking about good fundamental continuing, but we'll get you more flashes and more updates from that conference call, the stock at the day's high. Time for a break now. On the other side, we'll be joined by Amit Jeswani of Stallion Asset as part of Alpha Man. Welcome back. You're still tuned into Closing Bell. Let's talk about the auto space. There are a lot of buzzing elements in that sector. And long before India's EV revolution took off, before charging stations became commonplace, and before electric mobility became the next big investment theme, Hero MotoCorp placed a bold bet on Ather Energy. It started with a 205 crore investment in 2016. Nearly a decade and multiple founding rounds later, Hero's stake is now worth close to 14,000 crore rupees. Let's go across to Sudarshan on the big wall, and he's joining us with all the details.
The year 2016, electric scooters were still a novelty, charging stations were rare, the EV ecosystem was years away from becoming mainstream. But Hero MotoCorp saw the future and invested Rs 205 crore in Ather Energy, becoming the startup's first strategic automotive investor. The Rs 205 crore investment was just the beginning. As Ather grew, Hero doubled down, participating in almost every major funding round, even when electric mobility was still a nascent market. Today, Hero's cumulative investment in Ather has crossed 2,400 crore. Now, Ather Energy is valued at nearly 50,000 crore, making Hero MotoCorp's roughly 30% stake worth close to 15,000 crore after a sharp move that we have seen in stock price today. Against a cumulative investment of just Rs 2,400 crore, Hero is sitting on an unrealized gain of more than Rs 12,000 crore, translating into a return of nearly 6 times its investment. Ather stock has also rewarded public investors. From an IPO price of Rs 321, the stock now trades above Rs 1,200, a gain of almost 300% in just over a year, making it one of the strongest performance new age listings. Hero's investment wasn't only about financial returns. It gave the company early access to battery technology, charging infrastructure, software, and connected mobility. Knowledge that has helped shape Hero's own Vida electric scooter strategy. And Hero is not heading for the exit. In fact, the board has approved another investment of rupees 1,000 crore in Ather, signaling that it sees even more upside ahead. Hero MotoCorp's investment in Ather has become one of the most successful strategic investments in India's automotive industry. And as India's EV race gathers speed, Hero is making one thing clear. It's not done betting on Ather just yet.
Got it. All right. Thanks a lot for that, Sudarshan, and very, very interesting investment out there. But you'll have all been waiting for Amit Jaswani. Barely makes any TV appearances nowadays, but he's the founder and CEO at Stallion Asset who joins us on the show. Hi, Amit. I recall you were talking about Make India Great Again, MEGA, and hopefully things are going to get better from here on. But I want to ask you about how's the portfolio doing? What I understand is that our markets are still 10% away from the peak that we saw towards the end of 2024. But your portfolio, your investors seem to be quite happy because I think you're already at all-time highs. Is that correct?
Good afternoon, Nigel. Thank you so much for having me on your show. Yes, we are back to lifetime highs. The God's been super kind to us, and the portfolios are rocking, to be honest. And my read is clear. We've entered a bull market, Nigel, and this stays for the next at least a year's time.
Okay. Got it. All right. Amit, my colleague Mangalam has been talking about Kalyan Jewellers and what's going on there, and with regard to the valuation gap with the Titan and how that narrowed. Is that something that y'all are quite optimistic on? Is Kalyan that one of those stocks that y'all have been loading up on?
I don't know. I am not allowed to speak stocks, Nigel.
You can give it to us in some way that we get the message.
So my clients, we run a PMS. My clients, my family, we've got vested interest in whatever we speak, and these are not recommendations at all. But we dabble around the portfolio. See, this is like the companies that you're speaking, gold jewelry companies in general are doing very well, be it the market leader, be it the second tier guy, and ROCs are moving higher in these kind of names. I cannot say much on the companies, Nigel, this time around, but we might or might not have positions here. I can't say.
I mean, if you've bought it and it's disclosed, then there's no harm in saying it, right? I mean, it's not that someone's held you by your collar and said, no, you can't take any names and all of that and stuff. I understand that. It's all done with due disclosure and obviously with the fact that you may or you may not own that position. And at the same time, this is not investment recommendation or advice. But if something's done good for you, there's no harm in disclosing that, okay, this is what particularly did well for us. So if you could, in that light itself, tell us, what's delivered returns for you? Is it something from the logistics space? I mean, I recently remember, unpacking the business of delivery for our viewers. I wonder whether you have unpacked some gains for yourself on that one as well.
So in logistics, there's a lot of consolidation which is happening. Now you have only 2.5 players which are left in the logistics industry. The third-party express logistics side, Mangalam. So I see. So a lot of players have gone bankrupt. Expressbees went bankrupt. Ecom got acquired. FedEx went bankrupt. Ecom got acquired. So there's a lot of consolidation which has happened in this sector. Now there are only 2.5 players left, and I remain bullish. So I think there'll be a J-curve in profits. If you see both players which are listed, there might be a block which might come in one of the listed players very soon, or both the listed players. But I believe that consolidation has happened. Think of this as the telecom moment which is happening in the logistics side, where there were multiple guys, multiple players, and now the industry is getting consolidated. On jewelers, I would say that we buy growth. We have a pattern of investing, and across patterns, we keep investing in companies who are delivering well, who are executing well, and we like promoters who are executing. And as long as they are executing, we are with the stock, and if they stop executing, we move out. That's been our philosophy at Stallion. And that is not just across jewelry, it's across every industry. We do the same thing. We bet aggressively on execution. And Mangalam, I'll just tell you one thing. When I just finished my CFA, I would only bet on a good business because that is what we were taught. So that is where I started the concept of learning dhanda. That dhanda acha hona chahiye, and then we'll make investments. When we met so many people and so many promoters, I came to an understanding that sirf dhanda nahi hota hai. The more important thing is banda. and banda acha hona chahiye. Later on, now that we now more in the industry and more in like in the markets and cycles, the third most important thing is waqt. So now we bet on all three things: dhanda, banda, and waqt, and we keep doing these things, and we keep following a framework of investing, and it works well for us.
I mean, we could well be sitting in a mushaira right now, the kind of words that you said, dhanda, banda, and waqt.
You have a troika in the studio as well. We are the...
I mean, that's, I guess, that's what returns and, the bull market does. That's a very good thing. And, you spoke about the logistics space. Yes, delivery, one of the, concerns is that with the kind of institutional holding that it has, at some point or the other, there is always some or the other institution which is looking to, move. But since you spoke about dhanda, banda, waqt, it's waqt to give it to Sonal. Sonal, you have a question?
Well, yes, Nigel spoke about jewelry, must be buying that. We have Mangalam talking about delivery, so a lot of e-commerce transactions happening there. But let's talk about the realty space as well, Amit. What do you make of that? It's been one of the biggest gainer this month, Nifty Realty up around 12%. The pre-sales numbers have been quite strong. We haven't got some of them, but Godrej Properties, the largest developer with the largest pre-sales in FY26. What do you make of that? Anything else that you like from this space? Or do you think we are done with the peak demand that we saw in this particular sector?
So, Sonal, we at Stallion, we have some investments in the AI cycle, okay? And we wanted to have some anti-AI bets. So real estate is a great anti-AI bet. So a lot of concerns were there on the real estate sector that real estate will not be able to grow because of if AI comes, there'll be job losses, etc. But we have a lot of investments on the fiber side, on the AI side. So we just hedged our portfolio because we don't want to be beta on just one side of the party. We want to make money, but regardless, I think real estate, if you have the right kind of players, the cycle, very high probability based on our research, that the bottoms are done in the realty side and decent players. There are about 3-4 good players. You saw one player getting 8,000 crore demand in one day in the NCR market, and the prices
like
were not
that particular player, or do you like Godrej, which is a pan-India player? Because a lot of them are very specific to geographies, right? We do have Godrej, which is there across the country. Do you think that is a bet that you like?
We like real estate as a segment. Stocks I won't be able to take, Sonal. So sorry this time. But we like what is happening in the realty space, and we think the bottoms are in place. See, think about it. That is happening in the IT services space as well. Look at what happened with the ADRs yesterday. But stocks today are not down at all. So the markets are somewhat signaling probably that I don't know if they rally hard from here. I'm a AI bull more than a IT services bull, but I think the bottoms may be in place and the right kind of players will start rallying hard in the IT services. So right now the sell-all trade in the IT services maybe sell-all trade gets over here. That's what I think. I don't know. We don't have enough evidence, but that is what the screen is telling for the last few days. That no bad news. Yesterday, IBM was down 27%. All your ADRs were down. All tech services were down. But today in India, the tech services seem okay. And so I looks like we are at the end. So these are typically distribution ending phases. So you're ending your distribution, but of course they will not rally. If they grow at 2%, 3%, guidance of 0 to 3% will not make them rally. Till now, no one was even looking at numbers here. And it was like a full sell-on narrative. Right now, the narrative, if now a company starts growing at 20, 25%, and there will be IT services companies that will grow decently, they will use AI as an opportunity. I believe great compounding looks ahead in decent IT services. So 0 to 3% IT services will not do well. But the ones that grow at 20, 25%, I think the bottom is in place.
All right, Amit, what about people say India doesn't have the AI trade, but you all found something that has something to do with the AI trade, right? I think you all were playing it via the fiber players. And you're caught, I think, closer to the bottom of various stocks. If I'm not mistaken, I think HFCL is something that you all liked. And those results could look very, very good. And that's what the street has been baking into the stock price as well. How much of the good news is in the price? HFCL, I'm not sure whether Sterlite Tech as well was something that you all played.
So, Nigel, I would say that if you see what is happening in the AI world, you've got companies like Meta, Amazon, the hyperscalers, basically, the 4 companies. The capex that they did in 2024 was $220 billion. Government of India's capex is $120 billion. Government of India does around 11 lakh crores of capex. One company, Meta, is doing $125 billion of capex this year. Google is doing $185 billion of capex. Amazon is doing $200 billion. Microsoft is doing $200 billion. This year, hyperscaler capex is $725 billion. We have never seen this kind of capex. If you think about the capex bubbles in the world, and this is my very strong belief, and there are phases to play this. We saw choke-a-blocks because the capex is so fast. We saw choke-a-blocks which happened in memory, and SK Hynix and Samsung did profits of now. Their profits this year should be around $400 billion. Next year, since they're already sold out, the profits will be $500 billion. I am expecting choke-a-blocks to happen in India as well. There will be some choke-a-blocks in India as well, and we need to trade those. So it may not be a great dhanda or banda, but the waqt is right now in favor of these kind of companies. This AI cycle, let's see what happens. We'll have to see data quarterly, but I see this as one of the largest disruptions. Just think about all the capex cycles we've seen. The largest capex cycle the world saw was in railways, where you could only sell things in a 4 to 5 kilometer radius with horses or with ships. And railways changed the entire world. But railway companies didn't make money. The money was made by companies like Rockefeller got created, Standard Oil got created, Carnegie got created, US Steel. If you look at like refrigerators, when refrigerators came new, everyone was buying coolant and refrigerator stocks, etc. But no refrigerator company made money. The money was made by Pepsi and Cola, the users of the refrigerators, right? The same thing happened in fiber as well. When fiber came and Capital Comms, etc., so many companies did hyper capex, but money was made by internet companies. Think about it, Jio. Jio enabled internet in India.
Well, we understand that, money. Yeah, we get that paucity of time, Amit. Just a minute before we speak to you, HDFC AMC, strong numbers coming in. That stock's spiked about 3.5%. EBITDA margins of around 78%, net profit growth of about 12% as well, overall revenue growth of 14%. Just before we let you go, I wonder where this sits in your Dhanda Banda Waqt framework, EMS companies, because our colleague Ashmit just tells us that the cabinet has approved the other mobile manufacturing incentive that was expected and that's come by. Are you playing the EMS plays right now? Because everyone's speaking about manufacturing as a good dhanda. Obviously, with the EMS, the new incentives coming in, Waqt is nice. And all the players here, they aren't particularly bad, right? There's Dixon, there's Amber, there are many others.
So we like the space a lot. We have made investments in and out of these players at different points of time, but we don't have large exposure towards EMS right now, but we like the space a lot. I think the total profit pool, but there'll be newer players. If you think there's an automobile player who's coming, doing a very large, like a global automobile player who's doing a very large capex on consumer side. Consumer electronics, the total Indian profit pool of consumer electronics right now space around 2,000, 3,000 crores. I believe this goes higher multiple times in the next many years because this is one space. So if you take defense also, if you have BEL kind of, sorry, took a stock name, but no recommendation.
We managed it.
But electronics as a space makes a lot of money from here. This is one space which is secular, which you have great dhanda, you have great entrepreneurs running the show, and Waqt will always be good for the next 10 years in this space.
I think if we had a longer conversation, we would have understood your entire portfolio, Amit. But
we got some color. I think Kalyan Jewellers from the jewelry pack, maybe delivery from the logistics pack, consolidation playing out there. Godrej Properties could be one that was a little undecided. And BEL, I think we've got that one as well out of the way. And
we don't have exposure in BEL.
No exposure in BEL.
Maybe he's considering exposure in BEL.
Others also we don't have exposure. I don't know.
Thanks a lot for joining in, Amit. Always a pleasure talking to you. And MEGA, right? Make India great again.
MEGA. We will happen. This is a bull market. I'm confident.
Your portfolio is already at all-time high, so your investors would be rather higher and happier. So we look forward to chatting up with you soon, Amit. Thanks a lot for joining.
Thank you so much. Thank you so much.
Okay, all right. At that part of the show, then when Nimesh joins us, tell us what is he picking up in D-Street Chatter. Nimesh?
Hi, Nigel. Another lackluster day of trade. Again, intraday we saw a big fall. And looks like there is a bit of consolidation happening in the Nifty at current levels. I've been highlighting for a while now that on the upside, 24,300, 400 is a very strong resistance. on the Nifty, and that's really playing out. And again, looks like there's a bit of sector rotation as well, in various sectors. So capital goods stands out today, big move on those names. And the other side, IT is under pressure, and so is metal as well to some extent. From a flow perspective, again, a mixed day of trade, not big selling, but neither large buying as well. So again, it's quite softish from a flow perspective in today's market as well. And again, looks like the broader market participation is quite strong, and there are a lot of selective names which are outperforming on a consistent basis. So broader market doing good, but looks like at the Nifty level, there is a bit of resistance on the higher side, and the sector rotation is likely to continue in this earnings season.
Okay, and what about individual stocks, Nimesh?
So the first stock on my list is Bandhan Bank. Again, big move on that name and on large volumes as well. There is very strong FII buying, but I believe even a leading HNI investor has an active buyer in Bandhan Bank of late. So that's the buzz there. The second name is Vedanta, the holding company, which is at around 265, 270. You've seen a very large selling pressure in Vedanta today, and maybe that's the reason why that stock is under pressure. So expect high volumes, but on the sell side in Vedanta today. The third name is Sudarshan Chemical. Within the chemical name, this is really outperformed in the last couple of weeks, and now I believe at these levels there is a bit of institutional interest as well. At least I understand one leading domestic wealth company has been trying to accumulate Sudarshan Chemical at current levels. And the last is a couple of names where there is buying today. Bajaj Finance in the financial name and Nykaa both stands out, so expect high delivery volumes on the buy side in those two names.
Right, Nimesh. Thanks a lot for that. So those are a bunch of stocks that we will be tracking as we go along. With that, we'll take a short break. And as always, we'll get you buy today, sell tomorrow calls from our technical experts.
Welcome back. Well, the headline index is holding with a gain of only around 20 points or thereabouts. But from the broader markets, there are a couple of stocks that are bucking the trend. Ganesha Ecosphere, just pull up the intraday chart out there. That one has now spiked to the high point of the day. Remember, this is a 2,000 rupee stock that had half from the top. And now, in fact, regulations are moving in their favor with regard to recycling. So Ganesha Ecosphere now spiking to the high point of the day. And in the last 1 hour or so, Hind Rectifier, a stock that doesn't have very large volume. There are more than 1 million shares that are traded. And that one's locked at upper circuit, up close to around 20% as we speak. So we'll keep an eye out on that one. Most of the trading session was flattish. And then at around 2 p.m., it's suddenly seen a very, very sharp spike. And now there are pending buy orders as well. We'll have to see whether or not there is a name that comes about in that name as well. Mitesh Thakkar is back with us. Mitesh, couple of fresh trading ideas?
Yeah. Nigel, I think Swiggy is something, which has completed a pullback to its averages, bouncing back. So BTSC there with a stop at 267, for a target of around, let's say, about 275, 276. And the other one is SBI Life, which is a BTSC with a stop at 1856 for target of around 1880 to 1885.
All right. So those are the calls for tomorrow. We had a stellar listing today on D Street, Kusumgar. It was up around 40% at open and thereafter continued to see some gains. Devyani joins in to tell us more about the company and what the management spoke to us here on CNBC TV 18.
Well, Kusumgar Limited is the latest stock market entrant, and it's a manufacturer of woven, coated and laminated synthetic fibers. It serves 4 key high entry barrier segments, and those include aerospace and defense, which brings in 55% of the revenue in FY26, which is its largest segment, industrial and automotive business, which brings in 24% of its revenue, and lifestyle segment, which has been its fastest growing segment since FY24, which brought in 19% of its revenue in FY26. Overall, revenues came in at 692 crores in FY26, growing at a CAGR of 18% since FY24. EBITDA came in at 188 crores, growing at a CAGR of 32% since FY24. And PAT came in at 98 crores, growing at a CAGR of just about 8% since FY24. Now, the issue was oversubscribed by about 129 times, and it listed at a 36% premium over its issue price of 419 rupees at 569 rupees per share. And the management of CNBC TV 18 seemed very optimistic post-listing. It is set to resume its growth path after a brief pause that was seen last year, with major breakthroughs that the company has seen in the stealth solution segment. So this could be a key growth driver going forward. That said, the stock is currently trading at 64 times its FY26 price to earnings. So growth going forward will be a key monitorable.
Devyani, thank you so much for bringing us all those details. So that's new kid on the block. But let's talk about Hyundai now. The stock is up and buzzing in trade. Sudarshan is joining us now with what BofA is making of this particular name. Sudarshan.
So Hyundai is today one of the top mid-cap gainers after BofA Securities has come out with a note upgrading the stock to buy and target prices increased to 2,400 rupees per share. It said that new SUV cycle, export mix and margin repair set up the company for a strong 29% EPS CAGR over FY28-29 after a decline that company has seen over last 3 years. New launches that company has made over the last few quarters, BofA Securities believes that it has been underappreciated by investors. Now mid SUV plus compact e-SUV can add market share in the range of 100 to 150 basis points going forward, with potentially more market share gain from MPV and hybrids after FY27. Now, they believe that there can be a recovery in operating leverage that a company can see in H2 FY27. Lastly, on the valuation front, it says that at 23 times FY28 estimated P, it's reasonable if the company manages to see a rebound in the earnings, what BofA Securities is estimating.
Right, Sudarshan, thanks a lot for that. We also have Mayuresh Joshi, Director Research at MarketSmith, joining in. Mayuresh, what do you make of the auto space? It's been a buzz in today's trading session. In particular, Ather Energy, then you have, a couple of these two-wheelers doing well too. And add to this, you have the four-wheelers, Hyundai, doing well too. Brokerage is liking it.
Afternoon, Mangala. I think the autos have been on a roll to a large extent. And therefore, I think from the auto pack itself, I think the auto ancillary space is something that we have liked for a length of time. Obviously, we owned a few OEMs. The targets got achieved a few months back. Ather Energy has a run on its own. They're also probably looking at some news items suggesting in terms of a stake sale or a fundraise of sorts. And then the consistent growth that they've probably reported holds it in good stead. However, our own sense is that auto anks as a space probably looks a tad bit better placed. We had very strong takes on stock like Sansera Engineering as an example, Shriram Piston Rings, which are part of our portfolios as a clear disclaimer. And they've really done well over the past few months. A recent addition which we've added in the auto ank space in our swing portfolios has been Forgings. Our own sense is that the numbers that Forging has reported, top line growth has been a record for the year gone by. EBITDA margins close to 19-20 odd percent. There will be some element of leverage kicking in the second half of this year. The machine part, specifically, I think the machine components that they're probably doing, and the value-added portion within that as well, I think that part is probably increasing every passing quarter as we speak, which makes us believe that the EBITDA margin performance might continue and in fact can get accentuated on the higher side as we speak. Very strong management, decent balance sheet, and expectations of operating leverage getting paid out. So auto anks, Mangalam, I think is the way we are looking at the auto industry.
All right. Auto anks is the way you're looking at it. What we'll do is take a short break, come back. We'll line up more market talk with you on the other side. Stay with us.
Welcome back. You're still tuned into Closing Bell. A lot of stocks in the broader markets which are buzzing on the upside. Yes, the mid-cap index has come up from the highs of the day, but some of them are still at the highs of the day. Philatex India is one of them, up 15%. The UK-India FTA is finally in place. So we do have some of these textile stocks which are buzzing on the upside. Finiotex Chemicals is the other one. The stock is up 7.5%. This year itself, the stock has done really well, 56% higher on that one. Fedback Financials reported numbers just a while back. It has been a decent set. The stock, though, has come off from the highs of the day. Let's go back to Mayuresh Joshi, Director Research, MarketSmith. Mayuresh, what do you make of some of these textile names? Anything that you like from this particular space? And is this a big opportunity that these players are tapping now with this UK-India FTA in place now?
Afternoon, Sonal. I think the opportunity is pretty large, so there is no two ways about it. And the expectations in terms of the competition intensity, specifically when it comes to our neighbors, whether it's Pakistan, Bangladesh, Vietnam, I think the pricing probably comes far more competitive in India's case with this agreement probably coming through. And therefore, I think the expectations in terms of a lot of measures that the government had probably initiated, they've done the road tap initiative, which probably gave a large boost to the industry as a whole. And this obviously acts as a kicker and a tailwind in terms of additional volumes, realizations, and numbers coming through. Obviously, I think the impact is going to take some time. I think it's not that it's going to start from tomorrow itself. But I think in the second half, you'll probably see a gradual recovery happening in terms of cotton pillows, bed sheets, cotton sheets, as an example, which we are clearly lagging in terms of our neighboring countries on trade. Having said that, I think the integrated players, Sonal, are in a far advantageous situation when it probably comes right from yarn to fiber. And because of deficient rainfall that we're probably witnessing at this point of time, cotton or kapas prices probably are expected to remain very, very volatile. And therefore, integrated players like a Vardhaman, like a KPR Mill, like a Gokuldas as an example, SP Apparels is something also in toss in, can actually have the benefit in terms of the integration that they've probably got. That can probably take care in terms of the input cost volatility. And with expected volumes expected to come higher, I think exit 27, 28 numbers will probably look far, far better as we speak. So I think these select integrated players, in my opinion, over a longer period of time can obviously do well with this pack coming through.
All right. I recall we put out a piece actually on Editors Roundtable on textiles. It was ignored at that point in time. I think it was 3 months or so ago. We covered stocks like KPR Mills, the points that you had mentioned as well. And we had, breakthrough with regard to the India-US trade deal. And some of the stocks have done very, very well, whether it's Gokuldas, Welspun Living that you spoke about, also KPR Mills as well. But Mayuresh, what about cement? It was ignored. And it's a monsoon season, but people are getting optimistic. Why? Because Nuvoco, a stock that listed at $550, came down to 300 rupees. Suddenly, the results look quite good. And in the non-trade vertical, the cement prices have gone up by $20, particularly for East India. Now, the street is looking at a read-through. They believe that maybe companies like Birla Corp that have good amount of exposure there, Dalmia Bharat that has close to 40% exposure to East India, and Ramco can replicate a similar model. Hopefully that works out for them, for those that think that's going to play out. But Novoco's numbers are good, and that's what set the cat among the pigeons. Your view on cement?
Constructive, Nigel. And again, I think as a mechanism that we follow at Market with India, I think we do follow market leadership stocks within the individual spaces itself. And therefore, I think JK Cement, Ultratech is something that the ratings and rankings as we see it look extremely, extremely strong. I think the arguments are absolutely in place. What you've probably seen in terms of consolidation for the industry will play out for market leaders like an Ultratech, who've got a very, very strong presence across the length and breadth of India. JK Cement with a good mix in terms of white and grey cement as well. And with expectations at some point of time in the second half, pet coke prices, coking coal prices expected to remain stable and also probably expected to dwindle lower, might actually lead to a better absolute and a relative EBITDA per ton performance as well. Let's also not forget, I think the kind of energy requirements that are now getting created in-house, I think a lot of captive power that is probably getting consumed reduces the overall burden in terms of power and fuel costs. And the plants that they've probably got are very, very close in terms of delivery centers, reducing the overall stress in terms of the margin headwind. And therefore, I think constructive on the industry as a whole. I think leadership stocks like JK, Ultratech, in our opinion, over a longer period of time should continue.
All right, take that point, Mayuresh. Hang in there. We'll leave our conversation on closing bell as of now, but you stay on for Markets Forward in 3 minutes from now. In 3 minutes from now, we'll have the market close as well. If we start wrapping up right now, we'd see, the Nifty is up around 33 odd points. Could have been a lot more, could have been a lot less, but it's right in the middle of the range. The low of the today's trading session was 24,000. The high was 24,200. We've seen the Nifty manage to eke out some gains. The Nifty bank higher by about 0.6%. If you look at among the top sectoral losers, we did have the IT pack, which did not do particularly well. The metals also fell about 1%, and the FMCG pack as well was lower by 0.5%. The broader markets, we had about a third of a gain coming in for the mid-cap index. Among the top Nifty gainers today, we have Eternal, Ultratech, HDFC Life ahead of numbers, Eicher Motors, Shriram Finance. And on the stocks that did not do too well on the Nifty, we have Hindalco, Power Grid, Tata Steel, L&T, and JSW Steel. But I guess the mid-cap end was a lot more colorful.
It was. In fact, we did have the small caps that did really well, 0.7% higher on the Nifty small cap index. And we did have a couple of these chemical stocks that ended sharply higher. I spoke about Pheniotex Chemicals just a while back. Gujarat Fluorochemicals also ended higher by 5.5%. We do have the Jubilant Pharmova, which is up around 5%. Aarti Drugs higher by 4%. There's Alembic Pharma. So a lot of these mid-cap and small-cap pharma and chemicals names names are buzzing on the higher side. We do have refiners as well, which did well. Standalone, the likes of MRPL, we do have HPCL, which is also in focus. So that was also up around 2.5% in trade today.
Yep, and if you look at some of the notable movers, right, we had the result reactions. L&T Tech Services up around 6.5%. Billion Brains was up around 6% as well. Grow did extremely well in trade. And then alongside that, on the way down, Tata Elxsi obviously on their numbers was down about 5%. We had Patanjali Foods, a top volume loser today, down about 15%. Delivery was down about 2.5% as well. And Vedanta from, the metals pack was lower by almost 3%. If you look at some of the bigger gainers in the broader markets, we had Nuvoco, which continued its run, now about 18% higher for this week. RPG Life was the other one, which was up around 8%. PC Jeweler, the jewelry stock, continued to do well. And we had an 8% gain that came in for Ather Energy as well. Heroes Investment doing well for them. Bajaj Consumer continued to decline, now down 15% post its numbers, down about 4% in today's trading session as well. We also saw some decline coming in for names like Physicswala and Go Digit. Patanjali Foods obviously saw the biggest gash, down 15% on the back of volumes. And then we had DLF, which was lower by about 2% as well. Amidst all of this, we had a strong debutant. We had, Kusumgar, which listed with a 40% premium and ended with a premium as high as well. All in all, a range-bound trade for the frontline indices, but a lot more colorful action that took place beyond the markets.
Okay, with that, it's a wrap on Closing Bell. Stay tuned. Markets Forward comes up next.